Welcome to another video with Invest with the Doctor. My name is Dr. Haider. During the day, I'm an accident emergency medicine doctor. During the night, I'm a trader and an investor. I mentioned in my video yesterday that I was going to make this video. So I'm going to be talking about three stocks today. One is called Liquidia, and the other one is Vale, and the third one is Energy Fuels. And after talking about these stocks, I'm going to talk about something that's quite important as well. So I think it might be a good idea to listen to the whole of the video itself. I'm sure you already do, but I think it's more relevant now than ever. So the first stock is this one here called Liquida. So this is a company that manufactures therapies for rare cardiopulmonary diseases like pulmonary hypertension. Um, this stock, I think the chart looks nice, and it's been moving up quite a bit lately, and it's got one of my sort of favorite setups that I always talk about. And when I see these, that's when I want to sort of jump on to try and get the stock. Now, when I'm making the videos, please remember, people ask me time and again, is this a good time to buy? If I'm making a video, a lot of the times I would mention if it's a good time to buy because I'm buying it myself, and which is why I'm making the video. Or I would tell you there is a specific level or price it needs to hit before you can start buying. So I mention all of that in the video anyway. So this first stock is LQDA, Liquida Corporation. At the time of making this video, the price is around 40 US dollars, and it's got these three upsloping averages that you can see. So blue, which is the 21 week, red, which is the 50 week, and the green, which is the 200 week. I always look for these when I'm talking about a stock. Now, I don't normally just mention daily charts. I mention weekly charts. So this is a 21 week average. Okay, the red is the 50 week average, and the green is the 200. So these are the three lines that I've got, and always if they're upsloping, that means that the price is likely to go up higher. RSI, I look and try to see that it's above 50, so that tells me that there is good momentum in the stock itself, and the price is likely to rise much faster. People get a bit worried when it's coming to these overbought levels, but for me, this means that the price is the momentum is going to be there in the stock itself. And then I look at MACD, the green MACD of the week, and this tells me that it's sort of a confirmation signal that I'm doing the right thing. So this was the first stock. Like I said, the price at the time of making this video is 40 US dollars. It looks like a good chart to me. It looks like a good company to me. So I think this is likely to rise. Again, it will not rise in the it's not going to go parabolic straight away, but in the coming few weeks and months, it is much likely to go up. That's why I'm talking about the weekly averages itself. The second stock that I'm going to talk about today, which I also feel is going to do well, is this one here called Vale. So we have already talked about Liquida, and then we're talking about Vale. So this is the chart for Vale. At the time of making this video, the price is $15. The ticker for it is VALE. Now this stock at the moment, what I would say is coming. It's coming against this resistance. Okay, so this would be around $16. If the price breaks this $16, okay, and stays above this area, okay, so that would be make it a parabolic move going upwards from here. That's what it's likely to do. The Vale company, VALE, is one of the largest iron ore and nickel producers in the world itself. And with the way the metal prices are doing, if it breaks this area, then the price is likely to go much higher. Like I said, at the time of making this video is $15 US. Again, RSI overbought, MACD is green again. So like I said, you could wait. If the price stays above the resistance here for a couple of days, that would be a good time to get into the stock itself. The third stock that I want to talk about is energy fuels. This is the ticker for it is UUUU. This is the ticker. The energy fuels, at the time of making this video, the price is hovering at around $24 US. Again, this is the weekly chart. Again, the same kind of setup. Blue, which is the 21 week above the 50 week, which is above the 200. All of them sloping upwards. RSI is going towards the overbought area, and MACD again is green. So this is the kind of setup I like. Again, with this stock, what I would probably do is wait for the price to go above this area. Okay, so if it goes above this area, so that this is I'm talking around I would say around $25. If the price stays above $25 for a few days, then that might be a good time to buy into the stock, because then it's likely to go up much higher. So it just depends on if the price stays above this, and then it's much likely to go up higher. So these are the three stocks that I wanted to talk about today. And you can keep them on your watch list, or you could start buying them. That's entirely up to you. But I am in these stocks, which is why I'm making this video. Now, before I end this video, I want to talk about something that's very important, and that is this Wall Street Journal article. And if you see, it says 5 reasons gold is surging toward 5,000 an ounce. If you look at the price for gold right now, this is the chart for gold itself. And this is again the weekly chart for gold. Again, you can see the same kind of setup, isn't it? So blue, which is a 21 week, which is above the 50, which is above the 200, and they're saying that it's very likely that the price is going to reach $5,000 US. As you can see, at the moment is 4,914 or $13 US. So not a very big jump, is it? If they're predicting that it's going to surge towards 5,000, so that it's already happening, isn't it? And we are very much near it. So you can read this article yourself. I'm not going to take your time reading the whole article itself, but there is something important I want to show you in this article. And it says here, which I've highlighted here in green, just 3 months after hitting the once unthinkable price of 4,000 a troy ounce, gold prices are on the cusp of 5,000. Okay, as I've just shown you in the chart itself. And it says, among the most bullish gold buyers are those worried about the strength of the US dollar and other major currencies. They have snapped up the precious metal as a store of value that they hope will withstand economic shocks. Known on Wall Street as the debasement trade, this strategy is driven by fear that government's inability to tame inflation or slash debt will erode the value of currencies that underpin the global financial system. This is one of the reasons why the gold prices are going up like crazy. This is one of the reasons for the madness that is happening right now. And they're saying gold rally is about trust. For now, trust has bent but hasn't broken. If it breaks, momentum will persist for longer. Now, this is not me saying this. This is an article from the Wall Street Journal, which is quite a reliable journal, and lots of people and investors and traders read this. So, if they are saying this, then I think there is some substance to what's going on. They go on to say that the Fed's rate cuts, which have slashed the yield on government bonds and cash, are also driving investors to gold. So that is their reason for the gold price. And look at this chart. So this is gold futures priced weekly. Look at it. Crazy, isn't it? I've never seen anything like this for gold. Um, so they go on further to say, if just a slice of the mountain of cash held in money market funds is shifted into gold, there will be an outsized impact on prices of the precious metals. Goldman Sachs analysts estimate the exchange traded funds that hold gold account for just 0.17% of US private financial portfolios, and that for every 0.01% increase driven by purchases rather than appreciation, the price of gold would likely rise by 1.4%. Okay, 1.4. This is crazy. Meanwhile, investors must compete for gold with a set of buyers for which price is really an issue: central banks. So that means you and me, the normal people who are investing, are going to be competing with central banks. And then they're saying for central banks don't have a prices issue, so they can buy as much as they want, and for them price is not a concern. Normal investors like you and me are competing with the banks now. The banks have been buying for a little while, but with the price appreciation and all the things that I've already mentioned in this article, now the common investor is competing with the central banks. And this is one of the reasons why Bitcoin price isn't going up, because everybody is pulling into gold and silver. Now, they're saying central banks are buying gold not just purely for price appreciation or price performance, but the role that it can play in foreign reserves. Also, they're saying that the stocks are expensive. The most common way to value stocks is a multiple of earnings. They're saying one popular measure, a cyclical adjusted version of the price to earnings ratio that rely on analyst forecasts for future profits, says that the stocks have been more expensive only once during the past 100 years, right before the dot-com bust in 2000. So according to them, the stock market has never been so expensive in the past 100 years. So they feel that the stock prices are very high at the moment. So this is one more reason why people are sort of pulling towards gold and silver. Now they're saying tech stocks are again the main source of concern in the stock market, where a few huge companies such as Nvidia, Tesla, and Amazon can pull the S&P 500 index higher or lower, no matter what the other 490 some stocks do. So think about this. I think it's very important to look into this and try to understand what's going on. Gold is a good bet to keep gaining, if for no other reason than gold rallies tend to be long lasting. So again, just try to understand what they're saying. Gold rallies tend to be long lasting. So I'm not talking about 4 hours, 1 day, a few weeks, a few months. It's going to be long lasting. It's going to take time. So I guess why I'm mentioning this is, just basically to summarize this article itself. Okay, like I said, you can have a read of it yourself. You can just Google this Wall Street Journal article, 5 reasons gold is surging toward 5,000, and you will understand what I'm talking about. But in the fine prints, you can see a lot of very interesting things happening, and they're going to continue happening. So if you feel, oh, I'm too late to buy gold right now, what I would say is any pullback would be a fantastic time to get in. You get a 5% pullback, buy. If you get a 10% pullback, buy even more. So if that's happening, I think this would be your chance to get into it. I think a small amount, even right now, would make sense. Okay, to be into gold and silver itself if you haven't bought it yet. And if you've bought it, just wait for those dips, 5%, 10% dips, and then you can go on to try to buy them. This is a crazy looking chart. Look at this trend line. Um, it touches this, goes up, touches this, goes up, touches this, goes up, and where is the trend line moving? It's moving like this. So this is telling me, again, the averages are going up, it keeps on touching the trend line. That means the price is going to go higher. It's that simple. Okay, and the weekly MACD is green, RSI overbought, but then look at how overbought it's been the whole time. This is why I like the stocks which are overbought. This is why I keep on mentioning the same thing again and again and again. Now, this setup that I've got here, people ask me about this quite often, but this is what other people are looking at as well. All the investors, all the traders who are actively involved in the market, this is what they're looking at. So they're looking at the MACD, they're looking, at the RSI, and they're looking at the MACD. So I'm looking at the same things they are looking at. Okay, so I think that's important. The last thing is silver. Look at the price of silver. Now, I've been making silver videos. You can check them on my channel. I don't sort of want to be sort of repeating the same thing again and again. Telling you to buy silver or when to buy silver, but I have made videos and I have told you exactly why silver is catching up. I've talked about the gold and silver ratio, which is very, very important. Again, in this chart, same thing. 21 week average going upwards. It's stacking above the 50 week, which is stacking above the 200. RSI is in the overbought territory. MACD is green. The price of silver at the time of making this video is $96. How difficult do you think it would be for the price from 96 to reach a 3-digit price for 1 ounce of silver? Okay, I don't think it's going to be very difficult. So from 96 to 100 is not that far. There might be a pullback once the price reaches 100, but again, if it does and there is a pullback, well, you know when to get into these kind of stocks. So this is just something important that I wanted to point out. I'm going to be making another video tomorrow where I'm going to be talking about gold and silver a little bit more. I hope you found this video useful. This is how you create generational wealth. So you can very easily line up your pockets with the things that I'm talking about in this video. So like I said, I hope you found it useful. Please like and subscribe to the channel. And as always, thanks for watching.